name is Brandon Rush. I'm originally from Queens, New York, and grew up in Queens, New York pretty much my whole life. I was in my mid-20s, and then moved out to Connecticut, background in technology, kind of fast-forwarding through life. Starting investing, I'm relatively newer investing. I'm actually 4 or so years with my wife here, Catherine, and I've been a full-time broker for 2 years now, specializing primarily in multifamily and commercial property. So probably 80% of my business is in multifamily property. Primarily in Connecticut, I am licensed in Mass, but I just don't touch this market too much. But the Western Mass market is where if I am working, that's where I will be. And so that's me.
Okay.
Yeah.
So Brandon and I met through LinkedIn. So if I tell you guys, this is my personal opinion, I believe LinkedIn is for grown folk. Meaning, if you want to do business, be on LinkedIn. And now, this is a marketing tip. And when you get on LinkedIn, have a picture up there, please. Don't have because if you LinkedIn, you can have sort of a blank face up there. It's like, dude, I don't know what you look like. People do business with people they like and trust. Correct? And part of it is they look at your face, and your face says something. So you should have a smile on your face. It should be a nice professional picture. So it shouldn't be you waking up with after you just ate some grits and some eggs, and then you just get up there and put a picture up there. It should be a nice picture, right?
Did I have a nice picture?
Yeah, you did. That's why I reached out to you. And so my wife and I were looking at saying, okay, we want to do some investing in Connecticut. Actually, that's where I'm from. And so what we want to do is talk to an agent who was doing like 4, 5, and 6s and more commercial. And so Brandon, I reached out to him. He followed up, which is another key, right? That you want to deal with people who are, when you send them an email, they email you back or call you back, correct? So he called that, and so he actually we were on a TV show a couple weeks ago. Yeah, so he drove up, his wife drove up and was on our TV show. For those of you who do not know, we do a TV show, Let's Talk Real Estate, on the second Tuesday of every month at the New England Christian Television Network. And so actually Robert been on that. So a few people in the room have been on that show as well. So Brandon, he and his wife drove up and did a phenomenal job. And so I said, I want to have him come in and talk to you guys, because what I want you to do is recognize most people are very intimidated to invest in this market because of the price point. But you can look at other states. We have people in the room who have invested in Georgia. Some people have invested in Detroit, So as we're talking about being real estate wealth creators, right? Because real estate is everywhere. You can invest where? Anywhere. So you're not just limited to here. So I don't want to hear, I can't do it. Well, okay, if you feel you can't do it here, well, you can go to other states, jump on a plane, or the nothing. I'm trying to review. I'm dangerous with a microphone. The main criteria you want to invest out of your area is boots on the ground. Do you have a team that is in place that you can invest with and invest through? Now, that doesn't mean you can't develop it. So our very first purchase that we did was a 2-family in New Bedford. Well, I love New Bedford, by the way, Sterling. I invested in New Bedford because I had a friend of mine who said, hey, come down here and invest. And he's a firefighter, and he's an agent, and he had a lot of things that if I could make a phone call and say, hey, Scott, can you run by this house and take a look at it for me? He would. So what you want to do is, if you're going to invest out of state, you want to have boots on the ground, i.e. a person like Brandon, because he's in Connecticut. Connecticut is only about 2 hours, yeah. 2 hours away. Yeah. So if you can get a nice piece, probably 2 hours away, and have boots on the ground like Brandon or someone, the team he can build, it's a win-win, correct? Mm-hmm. So talk about investing in Connecticut. What are some things we should look for as we look investing out of state and looking at the opportunities in Connecticut? So start with that.
Yeah, sure. So I'll speak as if just out of state in general for those who just want to talk about that. So the biggest thing is your team. I would say start there. It's not only your real estate agent, it is your attorney, it is your property manager. If you don't have a property manager, it's your handyman and everyone in between. I think a lot of investors, they bypass that. They just want to get right to it and buy property, not realizing it is truly a business. It's not a hobby, and it's a lot of money involved, and you have to spend money to make the money. So it truly is a business. You are starting a business. So whether you want to buy one to own and occupy, still treat it like a business from day one. If you're going to buy a 10-unit building, obviously it's going to be a business from day one. So keep the business aspect in your mind wherever you're buying. I'll start with that. But I would say the team is probably in knowing the market. Visit the market, even if it's just Connecticut, it's an hour away. There's a lot of differences between Boston and Hartford, Connecticut. And if you're not privy to the market, you're going to lose money very quickly because there's so many different aspects of the tenant class, the politics of the town, changes that are going on in the town, of the city. There's a lot that goes on in different, just your next door town, they have so many more differences going on. So it's very important you visit the market, walk the streets day and night, check it out, and then decide if that's the market. Network with other investors in that market, go to meetups, speak with tradespeople in that market, learn the market, and then make an informed decision. Don't just go because it's half the price of Boston or whatever it is, and it looks like a big market, because that's where the downfall is.
Yeah, I mean, this is a couple who we were mentoring, and they went to a ring and got all fired up. Yeah, and I always say, those of you who, y'all know, we pastor, so I can break it down, talk about Proverbs. Proverbs is the best business book out there. So whether you're a Christian or whatever else, read the book of Proverbs, good stuff in it. But there's a proverb, it's Proverbs 19 and either 1 or 2, and it says, zeal without knowledge isn't good. Another verse says, desire without knowledge is good. So you can get all fired up, but then you don't have the knowledge that's needed to follow through with what you're trying to do. So we're talking to this couple, and they saw a property in Pittsfield. You guys know Pittsfield is probably about easily 90 minutes from here, and they saw the price point. Oh, I can get a 4-family in Pittsfield for $300,000. And I'm like, okay. So I'm like, pump the brakes. That's me. So they came, Dominique, and sat with us, and we were talking to them, right? And I said, if a toilet breaks in the middle of the night, you don't have property management, you're going to get in your car and drive 3 hours to Pittsfield. See, you need someone around you who can help you to answer those type of questions. So I said, pump the brakes. And so thank God they listened to us. And so now they work on their first flip and talk, which is a lot closer than Pittsfield. Y'all get talked by about 30 minutes, and Pittsfield like 2.5 hours. So it really does come down to think about, like Brandon said, like a business, thinking about the what ifs. So talk about what David Starlane talking about. What can go wrong in this? Because a lot can go wrong quickly. And one thing you talked about, when you came on the show, you was like, yeah, they don't hold it long when it goes wrong if they're trying to sell it.
Yeah.
So just thinking about those things of making sure that you have boots on the ground. So where's some areas in Connecticut that people can invest if they're looking out of state?
How much money do you have is the question. So Connecticut's actually a really small place. It's not a huge place. I would say, in my perspective, it depends on where you are in investing. Those who have lots of wealth, they're on the Fairfield County line close to New York, because those properties don't necessarily cash flow, but they're big appreciation plays for the future, but they require large influxes of money. Versus in some towns down there, maybe like your Norwalks, your Stanfords, Fairfield, things like that. As you go up the corridor, you hit kind of central Connecticut. So a lot of people who are not from Connecticut know about these markets more. Hartford is a big one that everyone knows. And then you have the surrounding cities and towns around that central Connecticut market. That's typically where a lot of out-of-state investors come to invest, just because of the price point. Those markets are typically a bit more landlord intense, and it require a bit more work just because of the tenant class, just because it looks like it makes more money on paper. It doesn't necessarily mean that you're going to make more money, because really it just means you're going to consume more of your time. Versus some of these easier markets like the Fairfield counties, yeah, it's a bit more money up front, but really the maintenance is very low, and it's not a lot. Those are very high income earners in that area. There's no riffraff down there. Versus the central Connecticut market, it's a bit more riffraff. It's a bit more challenging. So it's not always about the price point. It is about price, but it's also about how much you value your time. Where are you in life in terms of your investing is really what you need to decide. If you have a significant amount of wealth, there's no need to go into these central Connecticut markets. Just invest in a Class B, A market, and let your money grow smoothly over time instead of deal with the hustle and bustle of being a landlord. And then there are other parts of Connecticut, but primarily investors are looking at the Fairfield County market, which is close to New York City, and then the central Connecticut market. There's like the eastern part of the state, which is very quiet. It's not a lot. There's a few things going on there, but it's not a big investor market. But I would say Fairfield County and central Connecticut. New Haven is a very interesting market because it's on the shoreline, which is really good. But I still consider it relatively like a Class C. So it's not the best market, but there's lots of opportunity there just because of its demographic, where it's located. It's on the shore. Anything along the shoreline is going to appreciate well in the long run, just because of the logistics of boat yards and things like that, and bringing in transport. For those who know that stuff. But yeah.
Yale is there.
Yeah, absolutely. Yale's there. Yale's not going anywhere. Yeah, absolutely. Quinnipiac.
Exactly.
Yeah.
New Haven has a ton of colleges, so Yale, Quinnipiac, UNH, a lot of schools, so what you're looking at is you're looking to invest. You're looking at areas that are there schools, are there jobs, you know, things of that nature, because you can get caught up in the price point, and then you can buy something, and well, who's going to pay for my rent? Who's going to live there? They don't have no jobs.
And that's one of the big perks of Hartford. While Hartford itself is a hard market to be in, that's where all the jobs are. So all the surrounding markets are still really good because a lot of those, whether they be low-income earners or high-income earners, they're still commuting into Hartford for work. So staying close to Hartford if you're Central Connecticut, I usually recommend to investors.
Talk about, you mentioned classes. So talk about A class, B class, C class. They talk about, I don't know what y'all talking about.
So there's multiple ways you can class can be classified. I do it two different ways. There's the building class, which means like class A are relatively newer buildings built in the last 5-10 years. A class building being stuff that's built maybe up to like the 90s, late 80s, and then class C is kind of the older inventory out there. I don't really speak in that sense. I speak more in class in terms of the demographic of the tenant class. So class A is typically higher income earners. I don't know what the number is, but say, in Connecticut, a high income earner could be considered $150,000 or over. That's really your Class A neighborhoods in Connecticut. Between that, you have the Class B neighborhoods, which are still good neighborhoods and still good on your salaries, probably between, and these would be stuff in the high 80s to the 150 number. And then your Class C's, a little bit lower, and your Class C minus is really like the lower end of the spectrum in terms of tenant class. But that's how I kind of frame class. Because Connecticut's old. There's not a lot of new stuff out there, so you can't really say building types. There's not a lot of Class A assets in Connecticut. Fairfield County, there is. They're doing a lot of construction down there, but Connecticut as a whole, there's just a lot of old inventory, so I usually go off a demographic of tenant versus the building type. Yeah.
Okay. So I'm out here. I haven't bought anything, or maybe I bought my apartment unit. Get me ready to talk to someone like you. Get me ready to buy a 4-family, 5-family. Because this is my personal opinion. I think just of where we are, I think you have to go bigger to be more profitable now, just because of interest rates and things like that. So get me ready as a brand new person to talk to you and then go look for like a 5 or 6 or above.
Got it. All right. So generally it starts the conversation, and really the first thing I have to understand, what are your goals? It's everyone's different. Everyone's in a different place. Some people are trying to make $1 billion tomorrow. People like me, I have a long-term view, so it makes it a bit easier for me to invest, so I'm not in such a rush and I can accept certain risks, because over time the risk will be mitigated and you'll be fine. But if those who get caught are the ones that are going to get rich tomorrow, because it just doesn't work like that. But for new investors, honestly, it's just a conversation of your goals. It really comes down to that. Everyone is different in where they are in their life. But kind of just to generally speak on it, a lot of it is, do you have the money? Do you have the money to protect yourself? It's the very first question I have, because if you're watching Bigger Pockets or some of these things and talking about, I want to get in for no money, I just kind of, especially in the larger space, you can get burned extremely quick. So I just warn these investors, and a lot of them I just choose not to work with them, because if they're unrealistic, I don't want to set the expectation that I'm going to be able to help you and put you in a position that leads you to failure. So a lot of it is, do you have the money for the 25, generally 25 to 30% down payment on the larger properties? If the answer is no, then how are we going to get the money? Because there's no sense in even getting past that, because there's no secret sauce, there's no magic here. It's like, you got to find the money. And that may be you working with other investors and partnering up with family, friends, and so on. And that's perfectly fine and acceptable, but get past that part first. And then, what's your strategy? What's your team? What's your strategy? Are you planning to, is it a long-term hold? Are you planning to buy buildings and flip them? Are you planning to, and then going through that strategy. And overall, having that full conversation helps me determine if your strategy is even going to make sense or is viable for the market. And if it's not, I'm just going to tell you straight up, like, it just doesn't make sense. Like, I have investors call me now and say, hey, I want to buy foreclosures for $100,000, and I just say, do you have cash, and can you close with no contingencies? No, I don't want, I can't help you. It's just very simple. It's like, I'm not even going to fool you and tell you I can help you. So a lot of it is just having a conversation up front and being transparent on both sides. And if it's not going to work, it's not going to work. And just being honest up front. Yeah.
All right, we got time for about 2 questions. Any questions?
Use property.
Absolutely. So just to kind of give a background on our portfolio. So my wife and I, we jumped in the first year. We bought 3 properties in like the first year and a half. It was painful. I don't recommend doing that unless you know what you're doing. Luckily, we dug our way out. We sold one of them, and then we learned, because we were trying to get rich quick, and it didn't quite work like that. And we also invested in a couple of syndications. Syndications are larger investments that are really a group of people versus individuals buying it. So if you have lots of money, and I can talk to anyone about that, I highly recommend you go that route. If you have lots of money and not a lot of time, it's a great way to go. And your question, sorry, I went on a tangent there.
Do you use property management?
Yes, and we have a couple of small multis, and we live in one of them, and we have property management on that same property. And the reason why is because time. We value time, and I think a lot of people want to be landlords because it's cool, it's a fun hobby, but the truth is, for us, it just wasn't worth the time. we could like make a lot more money by focusing on money-making efforts versus managing crazy tenants and fixing toilets and getting the calls. So for us, we did calculations that said if we can get back 50 hours this year for property management, can we make $4,000? Yes. So that was a decision. It was just like that, and we're not going back.
Well, the second part was when did you?
So
before you went.
we bought the 3 properties. We sold the one, and then from that point, we made a decision. Only a year in, I would say, roughly a year and a half in after we first started investing. We just said we can't. It was just too many situations of just the conversations you have and the stuff you go through. You're just like, you don't want to say it's below you, but it quickly becomes below you because your time is valuable, and the stuff that comes out is just, it'll drive me crazy.
One more question, and and Brandon will be here for
absolutely.
For part of the day. He's gonna be.
Yeah.
You have to leave, I think, around 1 or 2, like what you said earlier.
I'm hanging out, but
Okay.
yeah.
Yes, he'll be full.
Hi, Brendan. Quick question. For B and C properties.
Yeah.
Can you hear me?
Yeah.
For B and C properties in Connecticut, would you say that would be like 80 units, 50 units?
What's the question? Like specifically the question?
Is that a good state to start looking into it or no?
I would say yes. I enjoy Connecticut. I think it has very solid fundamentals, very good school systems. They're not building a ton of inventory in Connecticut, so if you can find good deals, it's kind of locked in because the development there is really slow, so there's a lot of places to live, so demand will remain high versus some of the southern markets like Texas, the Carolinas. They're building a lot down there right now, so inventory is high, demand goes down. So I would say yes, personally, I still love Connecticut. In the future, it may change. It is a tougher market on the sense of like tenant landlord laws. This is, I forgot, blue, green, whatever state, but it's becoming more tenant friendly. But all that means is just monitoring your risk and working with the right, that's why I use a property manager as well, because the laws get strict. I can't keep up with the laws. It's too much going on, and you have professional tenants who will do things to you, and you get caught with your pants down, you can't move fast enough. But to go back to your question, I believe Connecticut is a good state. It's a little tougher to find deals because it's a small state, and we have multifamily, but we're not known for like 100-unit properties, 50-unit properties. You have a lot of like 3 to 8-unit type of properties throughout Connecticut. But if you can find one at the right price, then yeah, absolutely, Connecticut is a good place to be, even in the B and C class markets.
Even to force value into it?
Yeah, absolutely. I mean, that's the best way. If you can find a property, and that's the way to do it anyway. If you can find a property and buy it right, then absolutely. Anywhere, to be honest, if you can find a property and buy it right, is a good investment.
Yeah, because that's the business we're in. I tell people that we run to what other folks run from as an investor. So we're walking through houses that smell like cat pee and mice on the floor and all that type of stuff, dead mice. And I've been in the house and oh my God, this is some time ago. It was a dead cat in the house. And so I hit the front door, I'm like, what is that smell? Go upstairs. Now this is August, y'all. So y'all can paint the picture of what a dead cat smells like in August. And I was in the house in Brockton, and I love this stuff. But as an investor, you run to what other folks run from. And so what Brandon is saying is, now this is just one thing you'll find, you'll have your own personal opinion on how you want to run your business. But I like to buy things that I have to put some love in because I can force the appreciation of it. Got it? Where some people just want turnkey. So, and neither one is wrong, it just depends on what you want to do. But it goes back to what Brandon was saying, you have to have your mindset about what you want to do and how you want to do it. Brandon, how can they get in contact with you?
The simplest way, I'll give you my website, brandonrushagent.com. Email, phone, all that stuff is there with social media tags. I don't even know my social. I'm big on social media. I don't know my tags because they're all different. But if you go to brandonrushagent.com, you find it. Give me a call if you ever want to just talk real estate. I talk with people from all over the place. They just call me for random advice, and I'm willing to just share anything that you guys may need.
You also do a podcast. Right?
Yes, it's called The Agent Investor on YouTube. So if you go YouTube/@The Agent Investor, it's a relatively newer podcast, but just interviewing folks who are in the commercial and multifamily industry, whether it be attorneys, investors, bankers, whoever, and just having conversations to help make informed decisions for you guys.
And so you got the social media, you got his YouTube, and you talking about doing a meetup, but you sort of transition.
Yeah, so I still have my meetup. It's held in Newport, Connecticut. So if anybody ever wants to swing down to Connecticut for a night and have an event and speak with some other investors, give me a call and I can definitely invite you down to one. We also I hang out with my RIA a lot, so I definitely encourage the RIA. We have a big RIA in Connecticut, usually about 100 plus people per meetup. So I can definitely give guidance on any of those events in Connecticut as well if anyone needs it.
All right, give it up for Brandon, y'all.